Thursday the 4th of April, I can't really say a lot more than I did yesterday because the market's not really moving, but this is the dollar index chart. As you know, we are stuck in this sort of triangle thing. I talked about this being potential head and shoulders pattern, which isn't really relevant because that should be at the top of a bull run, not at the end of a sideways pattern, but nevertheless could be a little bit negative. The spike up on Tuesday followed by the big red candle on Wednesday certainly could be seen as negative, as the stochastics also start to turn negative from an overbought situation. And when you look at the hourly chart, we do have what could be a nice little head and shoulders pattern indicating a reversal of the short-term bull trend at least. So we've got good support from the 200-hour moving average at 97.00, 96.95. That's where the neckline is. So I would suggest a break below 96.95 would be negative. In the short term, we do have a little bit of Fibonacci in 500-hour moving average support at 96.85. So a break below here really is needed to confirm more significant moves to the downside. I'm just glancing over at my 4-hour chart. There's a little bit of support on the 4-hour chart around 96.80, 96.75, 96.70. So there's the problem with these sideways trending markets is you do tend to get quite a few levels, and that's what's happened because we traded sideways for so long. But the short-term levels are not as important as the long-term levels, and there's not a lot on the daily chart until we get down to 96.60, 96.55. So that would be a reasonable target if we do sink. Of course, all this depends on the non-farm payroll number out on Friday. I can't imagine much happening today. It's been a really desperately quiet week this week, and I don't see that changing today. We'll just have to wait for the non-farm payroll number to give us some direction for next week. Okay, dollar yen. Dollar yen, we are short from around 111.40, 111.50, I do believe. Where did we get to yesterday? 111.57. So we've got this trend line going back to the end of November. We've got the 200-day moving average. We're getting overbought on the daily chart with not many trading opportunities around. This one is one that's worth doing. Nothing on the weekly chart. Interestingly, on the hourly chart, don't see this very often, but that could possibly be described as a diamond top. Quite a rare pattern. That will hopefully help our shorts if I'm correct about that pattern. And we could sink down to 111.20, 111.15. This is the hourly chart you're looking at now. So 100-hour moving average just moving above that 23.6% fib level. That will give us some support down there. I'm not expecting any dramatic moves today, as I said, because we're waiting for the non-farm payroll number. But if we dip below 111.00, which is the 500-hour moving average, that would be more negative for today. I'm looking at the 4-hour chart. We've got some moving averages hovering around the 111.00 level there too. So yeah, below 111.00 would be more negative. And then we should be looking at 110.75, and then we've got this little trend line down here at 110.60, but that is a long way off. Gold, my little 100-day moving average, the blue line, is creeping higher with the lower Bollinger Band perimeter, or whatever you call it, as we approach the neckline to what could be a head and shoulders pattern here. So this is all getting quite tasty around 1284, 1283. Break below 1282, well, give it some room. 1281, 1280 maybe would be negative, but at the moment that's definitely holding. We haven't quite kissed the level yet. Maybe we'll do that today. So anyway, nothing else matters in gold apart from this level here. We've got a little bit of support, as you'll remember from, well, we've got some confluence of moving averages at 1276, 1275. We've got the 500-day moving average at 1274. So if this gives way, that will confirm something much more negative for gold, but really this is more important. So a break below 1280 would be certainly the first sign. Maybe you want to be short below 1280 and you want to add below 1274, that kind of thing, and then look for us to dip to the mid 1250 area. Aussie New Zealand is hovering frustratingly around 104.85, the 100-day moving average at 104.88. So getting overbought now on the daily chart. We're certainly overbought on the short-term charts. I'm looking for this to reverse and come down to test this trend line at 104.45. Obviously below 104.45. What was yesterday's low? 104.46. So yeah, below 104.45 would be more negative. Why is my little trend line here moving up and down? Let me have a look at some short-term charts. Hourly chart for the Aussie dollar versus the New Zealand dollar. So if I'm right and we go lower, and we seem to be starting to do that now. 104.55, 104.45 should be our first target, and I'd like to see it below 104.40. There's 104.30. That's the low. That's the low from the 2nd of April. So that was Tuesday. Below 104.30, then we'll be hitting 104.12, 104.8. I'd like to see that. The euro versus US dollar is worth a look just because it's the euro is, I think, the biggest component of the dollar index, and I've looked at that already today. Very mildly bullish candle with this spike lower, but the red body wasn't hugely bullish. But then yesterday we did have a decent run up. Is this a double bottom? It could be. It's not the strongest signal. We're overbought and the stochastics have turned and they're starting to look more positive. Every time it's happened in the past, that has worked and we have rallied. So there's a weak argument for a further recovery in the euro versus the US dollar, but I've just not got a pattern or anything to really get my teeth into to say, right, you know, this is going to reverse. But I guess I'd rather be long than short at this stage, put it that way. Hourly chart is holding the 200-hour moving average perfectly as it comes down towards the 23.6% fib at 112.44. So clearly we're going to have to get up through the 200-hour moving average, which at the moment is 112.48. What's yesterday's high? 112.55. So above 112.55, that should mean we have cleared everything and can run up to 112.80.85. Woohoo! A whole 30 pips. That's about as much as you can expect in these markets at the moment with very little movement. Anyway, you've got a bit of resistance there, only on the short-term chart really, but it is the 500-hour moving average and the 38.2% fib, so it will be worth paying attention to. On the 4-hour chart, I can see we've got a little bit of resistance up around 113.05. Where does that come on the daily chart? Yeah, well, this little trend line here, actually, that's not particularly relevant. I'm going to take that off now. It's too easy to put too many lines on when you've got sideways moving markets. So let's see. Oh, okay. The middle of the Bollinger Band is also at 12 at that mid 1280 area, 1280, 1285. So that's a good target for the euro on a break above 112.55, and it's probably the strongest resistance of the day too. If we get up through there, we could be looking at 113.20, 113.25. Stock markets have had one hell of a run, still going higher. S&P getting up to 28.89. So we've just kissed the upper Bollinger Band. Just be aware of that. There's no sell signal. We're not significantly overbought, but we are hitting the upper boundaries of the Bollinger Bands. So profit taking is always possible. Again, it's all down to the non-farm payroll number tomorrow, isn't it? But there's a lot of good news built into this market as we wait for this trade deal and whatever else. So you've got to wonder if we're susceptible to a shock. Hourly chart isn't really telling me anything, and I'm looking at the 4-hour chart. That's not telling me a huge amount. Well, actually, hold on a second. Okay, there's a month and a bit, month and a week, month and 2 weeks, maybe long trend line going back to the end of February, which we've also touched. So that kind of coincides with that Bollinger Band upper limit that you saw. Maybe we'll turn around and take some profit. Maybe some profit taking will come in at least and hit 28.60. That's possible. I've got a Bollinger Band I've got a midpoint of the Bollinger Band on the 4-hour chart at 28.70. So that could be possible. 28.70, 28.60. On the daily chart, there's really not a lot. The DAX has powered ahead this week. Really good move as we try to catch up with the US markets. We are just hitting this trend line though, to about 2.5 month old trend line. That seems to have stopped the market in its tracks. So getting overbought. We're not severely overbought, although we are quite overbought in the short term. So just be aware of that. I'm not sure I would get short this, but we definitely got to see it well through to a sustained break through 12,000. The big round numbers are always a little bit psychological as well. So yeah, we're going to have to see a sustained break above 12,000 for this to start the new leg higher. Probably then test the 500-day moving average at 12,285. But if we hold below 12,000, obviously we're going to hit some profit taking. I wouldn't worry too much. I don't think we're going to collapse, but that peak's 11,840. This peak is 11,830. So 11,840, 11,830 would seem an obvious first support level, or a first target at least.